Hello everyone. This is the pre-market report video for today, 20th August 2025 for the Indian stock market in terms of Nifty and Bank Nifty. In the last pre-market video, we discussed about the Reliance Jio's base price revision and it's expected to impact on average revenue per user ARPU, which in turn to increase the overall revenue. So the same was echoed by various brokerages during the market hours yesterday. For instance, IIFL said this Jio base price revision could increase the revenue by 2%, while Axis Capital projected this to increase the ARPU and overall revenue by 4 to 5%. So that itself positive. In addition, Jefferies maintained their buy rating and increased the Reliance target price to 1670 rupees per share. Hence, as a result of this corporate action and the brokerage commentary, yesterday Reliance Industries share price increased 2.8% and in single-handed it lifted Nifty by 57 points out of 100 points increase. Moreover, due to the oil price drop, all the oil refinery stocks including Reliance increased. Then another important thing yesterday was China lifted their export curb on rare earth magnets to India, which had been huge concern for Indian auto companies for the past 1 year. So this made the auto sector stocks to increase for the second day in a row. Hence, if we see sector wise, oil and gas, media, auto and FMCG increased above 1%, and on the other hand defense was down over 1%. Overall, for the second day in a row, the advanced return ratio stood at 9:4, meaning slightly more than twice the number of stocks advanced compared to those that declined. About institution, FII again turned as net sellers. Yesterday, the net sold for around 650 crore rupees, while DAI net bought for 2300 crore rupees. Here, just for info, in August month so far, FII were net buyers only on 2 sessions and have net sold on all other trading days. So, after net selling for 47,000 crore rupees in July month, they have already net sold near 25,000 crore rupees in August so far. Then moving to US market, the status was same as Monday night. Unlike Indian market, US market had been increased continuously in the last 2 weeks and S&P 500 trading near the all-time high value. So US tech stocks had the profit booking ahead of the Jackson Hole Symposium this Friday. However, stock specific influenced the market. For example, Home Depot delivered better than expected results, hence its share price increased 3%, and thus the similar stocks like Walmart and Target also increased, whose results due this week. So Dow Jones alone managed to close marginal positive 0.02%, whereas S&P 500 was down by 0.58% and Nasdaq decreased 1.46%. In case of VIX, it increased near 4% and moved above 15.5 from below 15. Meanwhile, the potential Russia-Ukraine meeting has now raised the prospects of easing sanctions on Russia, which in turn reduced the oil price by 1%. At the time of this video, WTI crude trading at $62 per barrel and Brent crude trading at $66 per barrel. Regarding Indian ADR, as it is, both the banks were down around 0.5%, whereas both the IT stocks positive for most part of the day. Here, all the ADR and GDR stocks price action was in line with the yesterday's Indian market, so no fresh price movement is observed. Hence, banks arbitrage difference is flat with negative bias, while IT stocks showing some positive difference. In line with that negative bias, early morning today, GIFT Nifty trading just about 25,000 mark. So equating that with the spot market, for now it's indicating the gap down opening of around 20 to 40 points. So those were the things happened in the dollar market last night. Now let's move to the new India related info. We know during weekend new GST reforms were announced, which we discussed in detail on the Monday pre-market video. However, the implementation timeline is not clear. So yesterday, various analysts predicted that this could make the customer to delay their festival purchases, especially the consumer durables like AC, refrigerators and washing machine, etc. Hence, we could say all those consumer durable companies will be on focus. Then second, Gujarat, Chhattisgarh and Madhya Pradesh, these 3 state government promised to provide land for NTPC to set up the new nuclear power plants. This new agreement expects to influence on the stock price today. Third, I don't know about the timing. Yesterday, Indian government, in order to boost the textile industries, they removed the cotton import duty roughly between now and October period. Here, as I said, I don't know about the announcement timing. Hence, if it comes after the market close means, then we could expect this as positive for textile stocks. Fourth, yesterday Indian government approved the purchase of 97 Tejas fighter jet from HAL. So again we could say this could influence the HAL share price today. Finally, regarding SEBI's proposed index rejig norms released for the consultation last May, which they mentioned that no stocks in any given index should be above 20% weightage. Here, as we know, this would impact Bank Nifty as HDFC Bank accounts for 29% and ICICI Bank accounts for 26.5%. And so analysts predicted this will lead to a huge fund outflow like over $1 billion from those stocks, considering 34,000 crore rupees in asset are tracking the Bank Nifty. However, yesterday SEBI relaxed that norm, allowing the rebalancing to be implemented in a phases over several months rather than a single go. I don't think this will influence the price action today, but worth to know. As a summary, global momentum is not good. In line with that, GIFT Nifty and Indian ADR indicating the gap down opening. Just for info, yesterday in US, their Treasury Secretary issued the fresh statement like that they are defending the 50% tariff on India over Russian oil, as India is just profiteering, which is unacceptable kind of. This will potentially influence our market on the more negative side if any means. Coming to the participant-wise open interest, yesterday 22% of the new put options and only 7.5% of the new call options were added. So the put-call ratio improved to 1.08 from 0.95. Then stance-wise, proprietary traders had the severe moderation. From near net 7% of their open interest on the bearish side, they reduced it to just 1.8%. Whereas on the other hand, FII and client had the slight moderation, but they are maintaining their respective stance. FII having net 7.5% of their open interest on the bearish side. On the other hand, client or retail traders having net 11% of their open interest on the bullish side. Then index future wise, no major change. If required, please pause and have a look. Overall, retail favors the market to go up, FII favors the market to go down. On the other hand, proprietary traders' current position reflects neutral with inclined negative bias. Moving on, as per stock open interest, Nuvama, Union Bank of India, Kalyan Jewellers, Muthoot Finance, Glenmark, Shree Cement and HAL are some of the 36 stocks that got an increased open interest along with the negative close indicates the short build-up. On the other hand, Exide Industries, Suzlon, Paytm, Delivery, TVS and PNB Housing are some of the 1 or 2 stocks that got an increased open interest with a positive price close indicating the long build-up. Regarding the things to look out, early morning before our market opening, Japan's trade data and mainly Chinese interest rate decision is due to release. For now, market widely expecting interest rate pause, but by chance if the Chinese government cut the interest rate by any means, then it's positive for global momentum, particularly Indian metal stocks. During the market hours at 11:30 am, UK's consumer inflation for July month, then at 2:30 pm, Europe consumer inflation for scheduled release that could influence the market. Then in the night for US, their crude oil inventories, 20-year bond auction and FOMC meeting minutes release are some of the important items we need to keep an eye out today. Coming technical, Nifty opened marginal gap up. However, on the first hour, it had some volatility, but after that, throughout the session, it keeps on increasing to the day's high above 25,000 mark. However, it closed below 25,000. Thus, on the daily chart, Nifty formed a bullish candle with minor upper and lower shadow, indicating range-bound action. In addition, it sustained above all key moving averages and the midline of the Bollinger Band with 20-day exponential moving average line inclining upward and the 50-day exponential moving average on the verge of tilting upward, both of which are positive signs. Furthermore, RSI climbed above 50 mark indicating a healthy trend and MACD maintained a positive crossover. Hence, Nifty needs to have a sharp breakout above 25,000 for a further upward journey towards 25,250, a crucial zone for negating the lower high lower low formation. On the downside, Monday's low of 24,850 is expected to act as the immediate support, followed by 24,750 as the key support. In case of Bank Nifty, it opened more than 100 points gap down and continued to underperform Nifty, however closed above 55,850. Thus on the daily chart, Bank Nifty formed a bullish candle with an upper shadow. In addition, it managed to close above the 20-day and 50-day moving average as well as the middle of the Bollinger Band, with RSI inching up further to near 50, exactly 49.55, and MACD having bullish crossover. Hence, the 100-day moving average 55,000 will be a crucial support zone, and we can expect Bank Nifty to extend its consolidation in the range of 54,800 to 56,300. Regarding the options front, the maximum call option open interest was at 25,000 strike, followed by 25,500 and 25,200, with maximum new call option rating at 25,500 strike and then 25,300 and 25,000. On the put side, the maximum open interest was at 24,900 strike, followed by 25,000 and 24,800, with maximum new put option rating at 24,900 strike and then 25,000 and 24,950. Thus, from options data, it suggests that 25,000 is expected to be the key resistance zone. Above this, 25,500 is the level to watch, with support at 24,900 to 24,800 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.